Good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this. We're Thursday, February 16th, 2023. It's yours truly, Mickey Blindside here with your market memo. Okay, guys. Sorry, yesterday I had to do a schedule change, so I couldn't do the market memo yesterday. Next week, it's also the same thing. Wednesday, I'm going to be traveling, so I won't be available next week on Wednesday, but Tuesday and Thursday, I'll still be doing the market memo at our regularly scheduled time, okay? And I'll post that on the Discord. I'll also post that on the YouTube community as well. All right, so let's get right down to business. What's going on today? Right now, we're seeing a little bit of a pullback in the markets, about a 1.5% pullback. I think a lot of this is options generated. If you look, VIX is spiking right now. The options market right now is actually supporting the market, especially in tech stocks. Okay, we're seeing a little bit of a phenomena where we hit certain levels and then we'll spring right back. And right now, that's just based on the monthly options expiration, and especially for the NASDAQ stocks. I do think, though, that tomorrow, if we can get a little bit of a VIX crush, like just temporarily, okay, maybe VIX just pulls back just a little bit before, going up again next week, we might see Tesla go up a little bit. And I think Tesla as a short is getting ripe. I kind of like this, actually. I like it. I like it right now at like this 212, 215 level. I like it even more at 218, 219 if we can get there. I think there's a very good chance we might be getting there next week, although now it looks like it's all reversing. So who knows? We may be too late already. When it comes to shorting Tesla, I'd rather be outside looking in than inside trying to get out. You know what I'm saying? Like I'd rather be really patient for certain levels, and if I miss it, so be it. I mean, I know, I get it. Being patient means that we miss out on a few trades, but I don't want to be stuck with with a bad trade here. So I like this 218, 219 zone right here. If we can get there, one more impulse push, that's where I'm going to buy some put spreads. Okay, I'm going to be buying some put spreads. Right now, I'm looking at either the March or April expiration. Actually, I might go just for the March expiration. And right now, the premiums are not that bad. It's not that bad right now. That's why I also want to use put spreads just because of the skew that it has. It's got a pretty good skew, so put spreads are definitely advantageous here. The 210, 190 does not look bad. That gives me around 8 or so. Okay. I'd like it better. Like I said, again, I'd like it better if it was like 666, so I get, a 2-to-1 reward risk. Or I might even move down the chain just a little bit, but this play doesn't look so bad. Okay, Tesla short for next week. So if I can get a good price by tomorrow, I want to try to get in on that. So that's what I see so far. First of all, let's do something first. We usually cover cryptocurrencies and Bitcoin at the end, but today I want to start with that. Let me tell you guys, this Bitcoin market and this Ethereum market surprises me every day. So right now, the notional value of the Ethereum options market is around $5.6 billion on Deribit, which is decent. I mean, it's decent. We've seen this level before, so it's no real surprise. It is ticking up, though, when it comes to notional value. But, it's kind of like just flattening out a bit here. Bitcoin is a different story, and we're going to cover that in a minute here. But let's just take a look at this Ethereum options chain. Right now, we're seeing a lot of activity for the kind of further dated. We're not seeing the weeklies getting all the participation. It looks like actually the end of June is where we're getting most, and mostly, of course, is in the calls. Most of it's regular trades. We're seeing not as many combo or block trades. And so it looks like with the regular trades, it's mostly calls being bought. Okay, so we're seeing some very a very bullish, call buying happening. The implied volatility is going up, and also the historical volatility is remaining. It's starting. It looks like it's bottoming. Okay, so we're starting to see bigger swings and bigger movements actually becoming realized in the Ethereum market. Okay. Let's take a look at some of the block trades if there are any. So look at the skews. The skews all look fine. It's normal. It's backwards looking skew. Where we saw all that activity was back in June, right? The end of June is right here. Okay. So as you can see, we see this little this point right here. This is where all the options buying maybe is happening. Let's take a look at around these strikes. And we'll take a look and see what's happening. So right here also too, you see the at the money volatility. It is starting to pick up just a bit. All right. Let's take a look at some block trades. Last time I did see a few block trades when I checked about an hour ago. Yeah, see that? We're seeing 6-figure trades. We still haven't seen those big 7-figure trades like we did right before the merge. Remember when we saw that? I'm not seeing that yet, but I'm sure it's coming. Or maybe these are being broken up into pieces. Maybe whoever's doing this is catching on that people are tracking this, and maybe they don't want people tracking them anymore. Could be. Who knows? Look at this. Sell by buying 2 for every 1 sell. This is a ratio spread right here. It's a ratio spread for March. So using a little bit of a premium to pay for further out the money calls. And if it moves enough where it gets beyond 2,200 or more, they stand to profit from that. Okay, so they're looking for a big move, ultra bullish. This is an ultra bullish spread. Okay, let's see here. What else? Right here, that looks like a buying. That's a buying 1,600 put and buying 1,800 calls. So that is a strangle. So betting on volatility. So as I mentioned to you guys, the historical volatility, the volatility is actually getting realized now, and whatever's implied, priced in by the options market, you're starting to see that realization in the actual Ethereum price itself. So we're seeing people betting on that too. Also here, another strangle. So lots of strangles getting opened, betting on volatility, okay? Excess volatility. So that seems to be the motive for Ethereum. Now let's get into the really interesting market for crypto right now. Bitcoin. Notional value, $7 billion. It's going to pull up right here. I saw it last night. See, there you go. Boom. All right. Boom. $7 billion. It is going up. We're starting to see now. We're starting to see the notional value go up. I don't know if there's any news events or anything for Bitcoin, or it could just be overall risk taking in the market. Right now, the bond market is flashing signals that perhaps we might see some risk off soon. So this might be that last impulse push upward before we see a correction. And often we see that, it happened in, if you want to see historical perspectives, look at 2018 in January. We had a big correction back then, but in December and into the first half of January, into the lead up to that correction, we had just a blow off top. I remember it was like, we were making like 5%, 6% in the S&P 500 in a matter of like a week or two. So, these things happen, where retail piles in thinking the trend is going to continue and then it corrects. It could be something like that, okay? Retail or the crowd, so to speak. Here also too, we're seeing a lot of activity in the June contract for calls. Of course, regular trades outweigh the block trades. Again, calls are being bought. Calls are being bought on both sides, block and regular. So we're seeing outsized call moves. Regular combo trades, it looks like a lot of that is call calendars, although it looks like most of the trades are just regular trades. So this probably is not in that much of a play. It's mostly it's probably just straight up call buying. And we'll take a look at the block trades together. Also, too, historical volatility remaining elevated. All right. Let's take a look at Bitcoin. So the skew also is reverse skew, or the backwards skew. All right. Remember how we saw forward skew on some of the closer dated options? We don't see that anymore. Although the June, where we're seeing a lot of activity, is also backwards skew. So that's pretty normal. And look, way more volatile. Remember this chart on ETH? It was more like around here on the chart. More flatter, I guess you could say. It had, the at the money volatility had come down. This one, the at the money volatility is staying way more elevated. Okay. Hold on. Let me see if we can go back and see that. I just want to. I think that's an interesting phenomena here. See this? Well, I guess that's pretty elevated too. I guess that's pretty elevated, but it looks like Bitcoin's is just a little bit more. Just a little bit more, at least as far as in relation to where it was in the lows back earlier in the year, back in earlier in February. Okay, so it looks like it's trending faster to the upside as far as implied volatility is concerned. Anyway, so let's look at the block trades and see what's going on here. Oh, wow, look at that. We're starting to see the seven-figure trades come out. 216, 57. What is this? Buy, sell. This is a call credit spread. This could be closing a position, by the way, because that's way in the money, unless that's a really bearish bet. But that's interesting. That's interesting that we're seeing that. It could be some profit taking. What is it? 218. We're seeing this too. Is that a straight up buy? That could be a straight up buy. I don't see anything paired with that one. Oh yes, there is this one. So buy sell. So that's a call vertical debit spread. So that is a bullish bet. But a little bit milder than just straight up buying calls. They are offsetting it with a further dated out the money call. Their profit is capped, but there's still a lot of profit to be made on that spread. So somebody's getting bullish. The market overall for Bitcoin is getting bullish so far. I mean, we'll see what happens. But I just wanted to report that this is getting interesting now. The OI is increasing, and so because the OI is increasing, guess what we're going to do? We're going to take a look at the options chain here, and for Bitcoin. Let's see. I like to see the gammas, volume, no positions. Let's go. All right. So we're starting to see this. This is the weeklies. Yeah, let's take a look at the weeklies. Volume. Where does Deribit put the volume? Oh, they put it closer. Okay, here, this way. They don't mirror. Okay, so here it is. There seems to be a lot of calls right here, 25, 26. Right now we're at 24, so I can imagine that is probably some type of call buying because it's a lot of retail. So we're seeing 25, 26, 25, 26 right there. Okay, so I imagine though that if Bitcoin busts out of that 26, that's probably going to be a negative gamma zone, and we might even see a gamma squeeze. But again, we only have 16 hours left, so how much of that squeeze are we going to get? Maybe we already saw that squeeze last night. It could be. Okay, I don't know how fast these numbers update, the volume numbers for Deribit, but if it's very possible that the gamma squeeze is already over. But if we start seeing that it creeps to 26,000 and it starts accelerating with volume, then I would think that okay, then it's not over. We could actually see it push even further up. But it has to get there first. Without that, there is no panic. There's no panic from the dealers if we don't get to that price first. Okay. So keep an eye on that if you guys are short. I know some of our members initiated some shorts last night. I think some of you are in the money now. Congratulations. Let's take a look at I'm actually more curious about the June expiration just because that's where all the action is in volume. Wow, look at that. Yeah, look at this. Way more volume. We're looking at 3,000 and 23,000 are the big volume strikes. On the put side, not much on the put side. It's really on the call side. I think there's some animal spirits in crypto. People are getting into crypto. People are putting money into this right now. I don't know how they're going to feel in about a month if the bond market yield inversion trade reverses. After laughter comes tears. So let's see what happens. Maybe I'm wrong. Who knows, right? Speaking of that, let's actually get to that because I think it is related. I think there's a lot of risk on right now, but the bond market is kind of telling us something different, all right? Let's start with actually the junkiest part of the bond market, which is the junk bonds market. We have the junk bonds advanced decline line. I updated this. Guys, we've been seeing now 9 days in a row of declines over advances, okay? More issues are getting sold than bought, or more issues are declining than advancing. And so right now we're seeing a short-term divergence between risk assets and the credit markets. Generally, when there's a disagreement between the two, big brother credit market, bond market usually wins. And I think a lot of this, propping up of the U.S. indices is actually options market based. I think it has to do with a lot of the gamma positioning in the S&P 500, and especially the NASDAQ. All the NASDAQ stocks are being propped up by their options market right now. Although we are, like I said from earlier today, we are seeing a little bit of a pullback, but already a lot of that pullback is reversing already. It's already starting to reverse. So I think that's probably going to be the case until, tomorrow or into next week. But we'll see. All right. So junkiest part of the market is declining. All right. Now, let's talk about other parts of the market. Okay. The 10-year Treasury is going up. And so when this happens, this generally tech stocks or anything priced for the future will compress in valuation when the 10-year goes up like this. All right. At some point, I do think the yield inversion trade reverses. We're not there yet. Even for the past couple of weeks, more and more money has been piling on into that. We'll see. And around March or April, that's going to be the deadline for the debt ceiling debate. Usually it is the way of the U.S. Congress to not do anything until the last minute. So right now, the U.S. government is dipping into pension funds and government retirement, the government employees' retirement funds to fund certain obligations in the federal government. At some point, they won't be able to do that, and they're going to have to ask Congress to raise the debt ceiling. That comes around March or April, and when that happens, when that debt ceiling gets increased, that's when the federal government, that's when the Treasury is going to start issuing a lot more Treasury bonds, okay? Because right now they're not issuing Treasury bonds. They're just dipping into government employees' pensions and retirement funds, which is kind of artificially increasing the money supply in the market. So that's why I also think that's why we've seen the liquidity conditions improve so drastically from the end of January, and now we're starting to see it weaken. And I think it's because the market is anticipating, okay, when the debt ceiling gets raised, the federal government is going to have to sell the treasuries to pay back the money that they borrowed from the government employees' pensions and retirement funds. So I think that is going to, when that reverses, that's when TNX is really going to go up. And that's when we might see a decent pullback in the market. And that's the pullback that I want to be buying. Again, patience. Patience is the key here. We'll see when that happens. Okay. As far as HYG and all that is concerned, this is what HYG looks like. HYG is breaking down, and that's, again, junk bonds ADL is kind of given that same kind of story. TIP TLT, which is our forward-looking inflation indicator, is still within the box. Okay. Now, excuse me. So, what is why am I getting into TIP TLT? Because I also want to get into MOS. We talked about MOS. Oh, it's pulling back. Okay, so yeah, it spiked up a little bit. and now it's pulling back. Literally yesterday, it missed my first buy level by less than 20 cents, which is ridiculous. Less than 20 cents. Oh my God. Yeah. So we'll see. We'll see if it comes back. Again, if that yield inversion trade happens, I think everything is going to pull back just a little bit. Okay, that's the real pullback that you want to be buying. All right. Although a lot of the inflation stocks are starting to pick up again, and MOS is one. MOS is the inflation stock, and we talked about the MOS, the thesis. The thesis comes from fertilizers and energy. As you know, right? I think I am anticipating that by the end of summer, there's going to be a shortage of potash, which is a fertilizer. Last year, a lot of farmers did not fertilize their fields because fertilizer costs were so high. And for every 2 or 3 corn plants, you have to fertilize your fields because corn sucks in. It sucks out all the nutrients out of the soil. So they need to put fertilizers in. Last year, a lot of farmers didn't do that because of the high cost. This year, a lot of farmers will have to do that. And if there's a shortage of potash, they're going to have to go with urea-based fertilizers. And urea-based fertilizers use natural gas, all right? And so I do think that we're going to see that shortage, and then the MOS is just going to rake in profits because of that. And so I want to get in on that. But I do think as we get closer to that yield inversion and that planting season, we might see a little bit of a pullback. That's the pullback that I want to be buying. Let's look at natural gas. Natural gas right now is also forming a little consolidating right here. It might consolidate for a few weeks actually, and then start picking up. And that's really when you want to get in on MOS and those names. Crude oil, crude, just this is no man's land for me, man. This is no man's land. I really want to see a push down into the 60s, or and that's when I'm gonna buy some oil stocks. And you guys know what oil stocks I'm looking at: CPG, other carbon-based fuel companies, AR and Taro. Just waiting for the right opportunities to get in on those. Let's look at precious metals. Silver doing some things here, coming down. We've seen the dollar go up, so of course when the dollar goes up, some of these precious metals come down. We're still not at the the value level yet on the gold contract. However, our GDX level got breached. It got breached to the downside, which means that we probably have further to go. Actually, we might be going down here, which I would love to see that. I'm trying to get in on this. It's the junior silver miners. Love to see this. Love to see this go down. I mean, we had that level at like 970 or so, 980. But hey, if we can get even deeper, if we can get like, oh man, 9 would be, that would just be the phenomenal buy at 9. We could get there. Speaking of which, let's look at the dollar. The dollar, this is what it looks like right now. It's starting to form a little base here. All right, we still got the UUP calls. I'm still kind of hopeful. I got that hopium. Let's take a look at some of the other currencies. Indian Rupee. Guys, I've been telling you about the Indian Rupee. I think that's going to be the forward-looking indicator for the dollar. It's forming a little base right here. I don't know if this is like a lower high, a higher low, higher high situation on a daily. This could be the start of an uptrend in the US dollar Indian Rupee chart. And so if this chart is going up, it means that the dollar is going up and the Indian Rupee is falling. And I think if that's the case, that could be an indicator that emerging markets are going to have this dash for dollars phenomena. Again, a lot of emerging markets have a debt servicing payment due later this year, and so if the dollar just keeps climbing up, there might be some panic buying in the dollar so that they can meet their obligation. And I think India, the strongest of the emerging market countries, if we see a dash for dollars coming from India, what do you think some of the weaker emerging markets are going to be doing, you know? And so that's why I think this is a very good forward-looking indicator. Plus, there's a lot of money flows in and out from India right now. There's a lot of interest in Indian assets. So this, I think, is a very good indicator for possible weakness, because if the strongest is weak, what does that tell you about, the other ones in the group, right? And so, again, I think this is the chart to watch if you're going to watch the dollar. And I think the dollar is going to tell us, well, which way is the market's going to be going in the next couple of weeks. So that's what I see. ZF also is a very interesting chart too. ZF starts breaking down, if it breaks down even further and makes that lower low, I mean, watch out. That's going to be dash for cash everywhere, not just in emerging markets, but domestically here and developed markets everywhere. We're going to see dash for cash if that happens, okay? Again, I'm not trying to be doom and gloom. I'm not trying to predict the future. I'm just anticipating what could happen. It's just right now it made that lower low, and if it just keeps going down, again, dash for dollars, it might happen, okay? So I'm just anticipating what could happen, all right? Any questions, comments, rude remarks, anything you guys want to see? Going once, going twice. All right, in that case, that will wrap up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord, be part of our growing community. No sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back on next week. Next week is Tuesday and Thursday. I'm not going to be available Wednesday. Wednesday, I'm going to try to air on the afternoon session, possibly. I'll let you guys know, but for sure, Tuesday and Thursday, I'll be on next week, same time, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern time. I'll see you guys then. Trade safe.